Good afternoon and welcome back, everyone, to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're going to be talking about a topic that is a relatively new topic, but we did cover something similar a couple of weeks ago, which was a trend following strategy. But today we're going to talk about sort of the exact opposite, counter trend setups, basically looking for reversals in the market. Why do we want to look for it? How reversal strategies are some of the best performing strategies from a risk reward perspective, from a raw performance perspective, and why it's a strategy that you might want to be familiar with and know how to use in your toolbox. We're going to go over all of that during today's session. So during these options education sessions, which normally we do on Thursday afternoon, but being the fact that markets close early tomorrow because of July 4th, we are hosting this session here today to make sure that you still have access to the options education that we do every single week, focusing on helping you trade sustainably and confidently and helping you grow your account in the long run. So what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we'll be using example purposes during today's session. So my goal with this session is to show you a proven strategy to identify a trend before everyone else in order to outperform the market. And the key here is outperform the market, because we're going to cover this in a little bit, but the difference between trading counter trend and trend following is very different in terms of just the feel of the strategies. So counter trend is very unnatural. You're basically going against the grain. A lot of traders feel that it's high risk, but what I want to show you is that it's the exact opposite. It's actually lower risk than trend following strategies, and it's actually mathematically proven as far as the way to outperform the markets, because you're trying to get in as early as possible. Trend following, by definition, is you are effectively late to the trend. A trend has already been established before you join it. Here, what you're trying to do is you're trying to find a trade at the establishment of that trend. So today what we're going to do is we're going to go over the foundational knowledge to help you understand how to identify the best entry signals for minimizing risk and accessing gains faster. And then we're going to do a live review of the optimal entry strategies from today and some of the new features we recently just launched into OptionsPlay that help you screen for these ideas using our platform. So I'm going to be showing you the OptionsPlay platform during today's session. If you don't already have access to it, you can sign up for a free 30-day trial at optionsplay.com/signup or pointing your phone to that QR code on your screen. If you have access to an OptionsPlay membership, that will also give you access to the slides and the recording from today's session so that you can watch along at your own pace. But I'm going to be showing you some new features that we've recently just launched inside of OptionsPlay that help you screen for these opportunities that align both the technicals and fundamentals. So for those of you that have been following our research for recently, you know that we like to take a technical and fundamental approach to how we screen for these ideas. And we've recently released some new features that I want to show you during today's session that basically automates both for you. So to kind of kick this off, to give you a little bit of a background on my background, I've been a market strategist for nearly 18 years. And over that time, I've worked with thousands of retail and institutional investors over that time. And, I've seen just about every single possible trading strategy under the sun: technical strategy, fundamental strategy, statistical strategy. And I've kind of seen what works, what doesn't work, the performance of different types of strategies. And what I'm going to be showing you today is specifically a strategy that I've kind of started optimizing over the last few years, specifically the last 5 years, with sort of extensive backtesting across the major S&P 500 symbols, looking at about 25 years plus worth of data to help me identify what is a small handful of underlyings that have a high probability reversal setup. So what does that mean? Stocks that are basically trending lower, that what we're trying to do is find the point at which we believe it's going to reverse. Whoops, why does it keep doing that? So basically, stocks that have been trending lower that we believe now is going to start trending higher, or vice versa. Stocks that have been trending very strongly that we believe now is the opportunity for it to turn lower. And what we're trying to do is identify the exact turning point at which the trend shifts from either bullish to bearish or bearish to bullish. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. And what we're trying to do is we're trying to find that pinpoint accuracy of when the trend changes from bullish to bearish, either on the exact day that it happens or very close to it. This way, what we're trying to do is we're trying to capture as much of that new trend as possible, or as early as possible to that new trend before everyone else has sort of caught on and is jumping in on that specific trend. Okay, so that's the goal from today's session. So a quick review here, and this is something that we've been going over recently, but I just want to kind of reiterate this because, like I said, when you explore technical strategies, they generally fall into two camps. There's counter trend and trend following. A couple of weeks ago, we laid out, one of my most reliable trading strategies that I've been using for 16 plus years, which is a trend following strategy. Everything about trend following just intuitively, for most traders, intuitively makes sense. It feels natural because you're effectively going with the flow. And it's easy to understand, right? You find a stock that's trending higher and you're just hoping to ride that wave, or vice versa, a stock that's trending lower and you're hoping to ride that trend lower. And these types of strategies are very popular because they generally have a higher probability of success. However, because you are identifying a trend after it has already started, your risk to reward ratio, generally speaking, is more modest or more moderate. But it feels natural to go with the flow. You generally have high probability of success. And one interesting hallmark of trend following strategies is that it can trigger many signals consecutively on the same stock. What that means is that you can get a trend following signal on one stock, enter that particular security. Maybe 3-4 weeks later, you get another buy signal on that same stock. And then 3-4 weeks later, you get another buy signal. So you could find yourself trading the same stock over and over again repeatedly for what could be months on end on the same security. Now let's take a look at the other side, a counter trend trade. This is when you're going against the trend. And there's quite a few different names that traders have invented for this type of strategy. Probably one of the more well-known ones is known as trying to catch a falling knife. And the idea is that, a stock is trending so far lower that everything points to it being trending lower. But what you're trying to do is you're trying to catch it so that at the time that it reverses higher here. And, I hate that term, catching a falling knife, because it has this negative connotation to it that it is somehow risky, if you will, to catch a falling knife. But I actually find it's the exact opposite. And I want to show you why. Now, going against the trend, generally speaking, will have a lower probability of success compared to going with the trend. But specifically, what I want to show you is one way to identify these trend reversals where you have a relatively high probability of success. More importantly for me, though, when you're going against the trend, you have excellent risk to reward ratio. I'm going to show you some examples here where you're going to see, and most of the time when you're trend following, you might get 2-to-1, 3-to-1, maybe occasionally you might get 4-to-1 risk to reward ratio on a type of trade when you're following a trend. But when you're going counter trend, you will very commonly get 4-to-1, 5-to-1, 6-to-1, sometimes even as high as 10-to-1 in terms of risk to reward ratio. So you're actually risking less to potentially make far more when you are early to the trend, because you're essentially establishing the trend at the very beginning. Now, the other thing is that it typically triggers very few signals. So in this particular strategy, you have to be patient. They don't come very often, but when they do come, they tend to be really good signals, or they tend to be signals that you can start with being a counter trend trade that then turns into a trend following trade. So once a new trend has been established, right? So let's say you identified this as a reversal point. Once that reversal has established and now a new trend has started, well, now you can become a trend follower in that particular stock, sometimes for a long period of time. So when you're following the trend, you could get 1, 2, 3, 4, 5 consecutive signals in a row, versus trend reversals don't happen very often. So they don't trigger signals very often. But overall, it generally feels pretty unnatural to go against the trend. So this is not a strategy that you typically use in your toolbox. It's going to take a little bit of time to get used to that. So hope this makes sense to everyone. But today, what we're going to focus on is the right hand of our screen, counter trend trades, finding kind of the best risk reward ratio setups in the market to try to outperform the market. Does that make sense, everyone? Please type 2 into the chat window if that makes sense to you. Perfect. Okay, so let's take a look at our counter trend strategy, because it's actually not too difficult. It's actually pretty straightforward, and we do most of the work for you. So there are lots of counter trend strategies, right? And if you just think about like just basic technical analysis, if you think about like an RSI indicator, technically an RSI indicator is, or any momentum indicator, RSI, stochastics, Williams percent R, MACD, anything that has an oscillator that oscillates around a zero line, is effectively kind of a trend reversal strategy or mean reversion strategy, right? It's basically saying, when does a security, deviate so far away from the mean, or enough away from the mean, that you believe that it's going to kind of revert back to the mean, right? That is by definition kind of a counter trend or reversal strategy. But if you just follow just the simple buy and sell signals of RSI or stochastics or MACD or any of the other momentum indicators, you'll see very quickly it doesn't perform particularly very well. There are certain market conditions where they perform quite well, but you only really know that in hindsight, rather than know for a fact at the time whether or not it is the right environment for those types of strategies. So if you just follow every single buy and sell signal from RSI, you'll see it doesn't perform particularly well. So what we want to do is have a better way to identify those price extremes at which we believe price is going to reverse from one trend back into another trend. So this is something that I've been, like I said, over my 18 years of doing this, I've seen lots and lots of different strategies and indicators that try to do this better than just the standard RSI. And the one thing that I have worked on and optimized for the last 5 years is to use an average of 2 momentum indicators, using the same momentum indicator, but using over 2 different time frames, averaging it out, basically creating a custom indicator that averages out 2 momentum indicators using 2 different time frames. And I found that has been a much more reliable indicator of these price extremes. So for example, what we would use is, let's say, a 10-period RSI and a 40-period RSI. So a 10-period RSI is basically taking in roughly 2 weeks worth of data, and 40 days, 40-period RSI is taking in 8 weeks worth of data. And what we're looking at is when the price extreme on both timeframes have reached a certain extreme level on the buy and sell side, that gives us far fewer false signals than if you were just to use a standard 14-period RSI, which is what most traders will use as a standard momentum indicator, somewhere between 14 and 20 periods. Like I said, if you try any of those types of strategies, you find that there's tons of false signals that it gives you. So I have found that you get a much better success rate when you average out a short and long-term momentum indicator. I typically use the same one, like RSI. Like for example, a 10-period and 40-period. You take the 10-period RSI and the 40-period RSI, and you just average the two out. and you basically trade it like it's an RSI indicator, but it's not just an RSI on one period, it's an RSI from two inputs to generate that. And that gives you much better quality buy and sell signals. But that in itself is not enough. So from my perspective, there are three things that you need to look for in a counter trend strategy. The first one is creating a custom indicator like what I just suggested, using some type of way to identify trend extremes that's more reliable than the standard indicator. And I just happen to find that using averaging out two momentum indicators that have two different time frames is far more reliable. But like I said, that in itself is not quite enough. What I tend to also find is that it's best to also identify trend exhaustion at these reversal points. So, for example, when you take your averaged out RSI, and let's say it is now above 70 or below 30, which are the overbought or oversold conditions for RSI, just because it's overbought or oversold is not enough as a reason to say, okay, I think things are going to reverse right now. But when you do also find trend exhaustion in conjunction with that, that is when you do have a much higher probability of a reversal. And what that means is that you make a lower low in price, but the momentum indicator is no longer making a lower low. Now, you don't need to use any fancy indicators for that. You can use a standard 14-period RSI to do this kind of work. But what you want to do is you want to see some level of exhaustion. So either sellers are exhausted to the downside or buyers are exhausted here to the upside. And when you have these two things, when you have these two conditions, the first and second one, you have kind of the technical conditions for a high probability of reversal setup. Now, I like to have a third category on top of that. And for any one of you that have followed us here at OptionsPlay and the research that we put out, you'll know that we always take a technical and fundamental approach to any idea. I just tend to find that having a fundamental view adds another layer that technical analysis doesn't give you. Just to kind of even just a basic understanding of the company. What does it do? How does it earn its profits? Is it profitable? Are those profits growing? How profitable is it? Those are some basic questions that I think most traders should be able to answer about any investment decision you make. And if you can't answer those questions, in my opinion, you're flying somewhat blind into an investment, because ultimately, when you're trading a stock, you're trading a piece of a specific company, you're trading a piece of business. If you're going to invest in that business without understanding that business, that's a pretty big blind spot, in my opinion. So I like to align it with a fundamental thesis as well. I generally find that if I'm bullish on a stock, I want to find a stock that's generally I consider undervalued, or vice versa. If I'm looking for a bearish stock, I want to generally look for stocks that are overvalued. Now, this last piece is probably the most subjective piece, right? What counts as overvalued? What counts as undervalued? You ask 10 different people, you're going to get 10 different answers. So this is the part where we've done some work to automate this work for you. Now, there's no perfect way to do this, but the way that I've been doing it, the way that I've been showing you in all of our Monday morning, research trade idea sessions, where I walk you through our technical and fundamental thesis on the stock. That's the same framework that we use, that we've applied to identifying stocks that are overvalued or undervalued. And what we do is we help you identify these conditions to help you better understand where you can find these high probability setups. Now, I saw one question here. Someone saying they don't understand exhaustion. Exhaustion is a term that we generally have for divergence, right? Divergence means that, a lower low in price, that is no longer being confirmed by a lower low in momentum, right? So generally speaking, if things are all good, as price makes lower lows, momentum also makes new lower lows as well. But when we find that, basically near the extremes, near the times when things start to reverse lower, we start to see lower lows, but momentum no longer makes a lower low. And as you can see, when that happens, you kind of get pinpoint accuracy. So for example, in this particular example, the trade signal was generated on this particular candle. On that candle, we saw exhaustion, and what we saw was a clear reversal, and that's in that particular security, with pinpoint accuracy down to the exact day that the reversal happens. And that's about as good as it gets. And the goal here with these types of reversal strategies is to try to identify the exact reversal down to the day. And there are very frequently we're actually able to identify these down to the actual day of the reversal within a couple of days, which is a little different than like a traditional RSI buy or sell signal, because an RSI buy and sell signal still kind of waits for a bit of a confirmation of that reversal before it generates that buy signal or generates that sell signal. By using these trend extreme and the trend exhaustion, you're able to kind of identify stocks basically near or at the exact day that the reversal happens from one direction to the other. And because you're trading against the trend, especially when you're trading against the trend, I tend to find that the fundamentals make a pretty big impact on the success of this as well. Because if you're going to identify a stock that everyone else is selling, but you think it's a good time to buy, well, then I think it makes sense that you have a good understanding of the business, right? Like, why is everyone selling? Is there something about the company that you didn't catch? So that's where I think understanding the fundamentals is an important part of doing your research with these trade ideas. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Perfect. Okay, so before we look at some examples, I want to talk about why these counter trend strategies, in my opinion, are so important to learn, especially if you haven't really used these types of strategies, counter trend strategies overall, and you tend to find yourself just naturally preferring to go with the flow and following the trend, is that, and we'll show you some examples of this, but the goal here is to actually reduce risk. A lot of people think of these counter trend trades as very risky, right? And again, that term "catch a falling knife" is many times associated with counter trend trading, and it gives it this kind of negative connotation. But from my perspective, it's the exact opposite, right? Just going in this chart example, right? Let's say at this stage, you decided to go long the stock at that specific candle, right? Everything about the stock is bearish. You decide that, okay, you know what? I've got enough evidence that this could be a potential reversal. I'm going to take a long position here on this very candle, right? So the reason that I like these types of setups is because if I go long on this particular candle and the stock just over the next couple of days continues to drop, it doesn't have to drop by very far for me to say, I did not get the timing on this correct. I'm going to get out at a very small loss, because the stock does not need to go very far in the other direction before I can say, okay, I didn't get the timing right on this. But if the trade does end up being right, the total that I'm risking, right, I would put a stop maybe down here, versus how much I can potentially make on the trade. If I look at kind of where the stock was trading at prior to this, the risk to reward ratio on a counter trend trade, like I said, is very commonly 4-to-1, 5-to-1, sometimes even 6, 7, 8 times to 1. And it's all about maximizing the potential reward for every unit of risk that you take. And you're just not going to get these high risk to reward trades when you're trading following the trend. You might get 2-to-1, 3-to-1. 3-to-1 is probably the most common risk to reward on trend following, versus if you look at counter trend, 4-to-1, 5-to-1 is far more common on these types of trades. So it's about kind of finding these stocks with maximum risk to reward. And And I'll be honest, I sort of I sort of understand why a lot of people think that these strategies are high risk, but in reality, they're actually lower risk, in my opinion, than if you're just following the trend. The other thing is outperformance, right? Because if you want to outperform, you have to get into a trend as early as possible, right? If you think about stocks that, you wish that you bought, there's everyone's got a story of, I wish I bought the stock at $10. It's now trading at $500. Well, how do you buy a stock at $10? You got to buy the stock at $10 when no one else wants to buy it, right? Everyone is selling it. You're the only buyer. That's how you outperform. And there's no way to outperform if you don't look at counter trend strategies. And third of all, with these types of strategies, or at least the optimized version of these strategies, you can get into a trade and get out very, very quickly. You should reduce the amount of time in a trade by more than 30 to 40% by trading counter trend versus trend following, because what it allows you to do is basically identify a optimal entry and be out as quickly as possible, because the trade, generally these types of setups either work immediately or they don't work at all. And what that means is it reduces the amount of time that you are in a trade, winning or losing, when you're using these type of counter trend setups. Okay, so let's take a look at kind of how the OptionsPlay tool automates these scans for you, and the new tools that we've recently just added that actually overlay the fundamental portion of this as well. Okay, so under the OptionsPlay ideas section, we have a list of technical ideas. We have technical ideas, cover call, credit spreads, and short puts. We're going to focus our attention here on technical ideas. And what we're going to do is we're going to do some sorting and filtering on these ideas, because we have different types of scans. We have trend following scans. We have CCI trend scans, which is the topic which is the scan that I showed you here a couple of weeks ago. That's the strategy that I've been using for over 16 years in my trading across every single asset class. It is by far the most reliable strategy that I've used in my trading history. But today, what we're going to do is we're going to focus only on counter trend trades. So let's remove all the non-liquid symbols that are counter trend. And we see we have 18 counter trend ideas for today. So we can take a look at a few of them and just to see kind of what they look like before we do a little bit more filtering. Okay, let's just take a look at some of these, right? So Generac Holdings, as you can see, this was a $99 stock that's now a $150 stock. So this stock has made a pretty nice run here in the last couple of months. And basically what we're saying is that it's reached enough of an extreme where there's a higher probability of a bit of a pullback here. But what it lacks here is that exhaustion that I was talking about here, right? We made a higher high in price, but we also made a higher high in momentum. So it satisfies the first criteria, but doesn't satisfy the second criteria. From my perspective, it's time to move on. So, it takes a little bit of work, but, with that little bit of work, you are going to find the best possible trading setups. BlackRock, this was a $700 stock that's now nearly $1,100 stock in less than 2 months. Higher high in price, though, continues to make a higher high in momentum. So, what this is showing me is that, yes, this stock is overbought, but buyers are not quite exhausted, or not exhausted enough, where there's a higher probability of a quick pullback here. A good example of maybe some exhaustion here is back here. You made a higher high in price, no longer made a higher high in momentum, and that gave you that reversal, right? Same thing here. Higher high in price, did not make a higher high in terms of momentum. Well, actually, this did get confirmed. So that's not a great example. But if I find more of these exhaustion setups, I'll show you here. I'm going to see if there's anyone that does have some exhaustion here to the upside. That one doesn't. I'm looking at this live with you. I haven't looked at these ideas prior to looking at this. Emerson might be getting close to that. Let's take a look at some more. That a lot of these stocks have confirmed their recent highs, which is a good thing for the overall market. Okay, here's one. Disney is a one, right? Here's one. Let's zoom. Whoops. Let's zoom in here on Disney. Okay, so look, It's not quite there, but as you can see, we've made two consecutive higher highs, but momentum has not really made any new highs. So Disney is a good example of one that, it's not the best example, but it's definitely one of an example where the new highs are not really being confirmed by momentum. So this is probably, out of all the ones that we've looked at, probably the best candidate out of the ones that we've looked at so far. Okay, let's keep looking. Let's look at Seagate Technologies. We have a lot of bearish ones. That one did get confirmed. Western Digital, that one also, as you can see, as we made higher high, momentum continue to make a higher high. We'll just keep looking. Sometimes, some days you just don't find a lot. And, that's okay. And again, that's one of the things about counter trend is that these signals they don't come along very often. Robinhood, this is maybe an example of one. Maybe not the best example, but recently, as you can see, it made a higher high, didn't make a new higher high, but it didn't generate a sell signal until now. So, I would say that still sort of did get confirmed because it made a higher high and momentum did look like it made a new high as well. So that's also not a good example. So sometimes, some days you just don't find ones where you meet that criteria. So, I think today might be an example of day where, just because we want to trade counter trend, the market is saying now is not the time. JP Morgan, here's one. Yeah, just maybe slightly looks like there might be a little bit of divergence here, but not quite enough, in my opinion, to justify it. So you really have looked at all of these, right? Someone said Smuckers. Where is Smuckers? Is it on this list? Or are you just saying Smuckers as a symbol has divergence? Let's take a look at that. No, I wouldn't quite say that this is divergence. So anyway, like I said, what we're looking for is that here, I'll show you an example of one where there was divergence. And this is actually one that we recently is our trade idea here for today, right? And Target, recently triggered this particular signal back here in early April. Basically, as it made a new lower low in price, as you can see, momentum did not make a new lower low. And basically, when it did trigger that signal, it triggered that signal at the very beginning of that reversal. Now, we didn't enter it at the time because target fundamentals, were compelling, but the revenue growth here wasn't there. But we recently saw that breakout here above that $100 level, and we decided that now was a time to confirm that this counter trend reversal was true and did hold, and we're taking a kind of a more conservative entry on this trade. So we basically we were a lot more patient. We basically said, this could trade sideways or maybe continue moving lower for some time. Let's be patient. We waited for the breakout here before we entered long here for Target. But this was a good example here of a stock making lower lows in price, generating that buy signal, having that exhaustion signal on top of that, and giving us that exact entry point here, which is around $88 on Target when it did generate that signal. Okay, so that's an example of an example. This bottom indicator is RSI, just a standard 14-period RSI. So when you're looking for divergence, you can just use a standard period RSI to do that divergence work. So what I do want to show you here is a new feature that we recently added. Even though we didn't find any valid signals here for today, that's okay. The thing about these types of strategies is not every single day you're going to find a counter trend trade. It's actually, I really, if I can find one good one a week, I'd be pretty happy about that. The reality is that there are not many undervalued stocks that are oversold, that have exhaustion, that are ready to be, buyers, or vice versa, overbought stocks that are exhausted or overvalued as well. They just don't happen that often, or certainly don't happen every day. And that's something that we need to be conscious of. And we do our best to kind of highlight some of these ideas to you on our trades. But these are some of the ideas that we present. But a new feature that we recently just added to our trade ideas is that we can also basically help you narrow down these. In this particular case, we're looking at just counter trend, and we're looking at stocks that are somewhat liquid or very liquid. But what we can do is we can say, well, let's take a look at only the stocks that are overvalued in this particular case. And the reason that we don't have any undervalued is just because there are no stocks that are undervalued in this particular list. So these are the 4 counter trend stocks that are also overvalued at the moment. So what we're doing is we're basically taking that fundamental research piece, which, like I said, is the most subjective part that most people have the toughest time figuring out what constitutes as overvalued or undervalued. And there's no perfect strategy for that, but it's the same strategy that we highlight every single week of how we look at overvalued, undervalued. We look at valuations, we look at expected growth rates, and then we look at net margins, and we see how does it stack up against the industry from a growth perspective, from a profitability perspective, and from a valuation perspective. And when we see a divergence, if you will, meaning stocks that are growing faster than the industry, more profitable, trading at a low valuation, or stocks that are not growing as fast or not as profitable, have a very high valuation, that's how we generally determine overvalued and undervalued. So what we're doing now is we're basically allowing you to basically screen for opportunities. So where you look for the technical setup that you're looking for, and then we do the fundamental filtering on top of that for you. So out of the how many ideas were there? There were 18 counter trend ideas. When we look at kind of from a valuation perspective, that narrows it down to just 4. And this is designed to help kind of to make it so that you have done your work on the technical side and at least do some basic screening from the fundamental side that aligns with the way that we teach fundamentals. You might look at fundamentals differently, and that's okay. If you do want to do your fundamentals differently, you can always set up your own watch list, right? And what we can do is basically help you screen for any of the technical ideas within your watch list. But we have our overvalued list and we have our undervalued watch list, which you can actually just look at in the watch list section here as well. So you can basically say, well, show me all of your undervalued list, right? So let's take a look at our undervalued stocks. We have 96 stocks in our undervalued stocks, and you can take a look at every single one if you like and just see what stocks do we deem as undervalued, and you can take a look through this list and you can go through it one by one. But I find it much easier where I'm just looking at my technical ideas and I can look at okay, what are the 4 stocks that are counter trend that are also overvalued? And JP Morgan actually looked pretty interesting to me earlier today. Sorry, it was American Express. I was looking at American Express. It looked quite interesting because, as you can see, it's kind of at this double top here. Let's call it 325 double top, right? So it's got kind of a lot going for it. It's at this double top or even triple top, you could call it. The stock is overbought. It's not exhausted here. So not the perfect setup, in my opinion. From my perspective, the perfect setup is if you have, this double top or triple top, you get some exhaustion, it's overvalued. That would be the perfect kind of setup where I would take a short position here in this. So I've kind of satisfied 2 out of 3 criterias. For those of you that are, really itching to take a short position here, this is where I would focus my shorts right now. For example, if you believe that the markets are a little bit overbought, you feel that the markets are, making new all-time highs or at risk of a pullback. How do you find bearish ideas? This is how I would find my bearish ideas for taking a bearish trade in this market. And this works for all the other scans as well, right? This is not just for counter trend. Like I said, out of all of these names, I don't think any of these names satisfies all 3 criteria. So for me, that means that I'm not going to trade any of these ideas, with the exception of maybe American Express, because it's got that double top, right? JBL, maybe you can say there's a little bit of divergence here, but not enough, in my opinion. Just in the last few days, we see a higher high. Momentum didn't make a higher high, but that's so short. That's not enough, in my opinion, to go short here in this particular name. But, look at it. This was a $111 stock that doubled in 3 months. These are the types of stocks that have a higher probability of that counter trend move. And a lot of people look at a stock that's doubled in 3 months and say everything about the stock is bullish. I want to be long. Well, that's really where, in my opinion, that's the worst place to be long a lot of times, because this is probably this is a pretty crowded trade. There's a lot of people who made a lot of money, made a lot of profits in the last 3 months that might be looking to take some profits off the table. And you don't want to be the person that's caught, be the person caught holding this particular stock at the last possible point, because it clearly, there are some signs that buyers are starting to get exhausted. And when buyers get exhausted, that's when you have the highest probability of that short-term pullback being a quick and violent one. And this also happens to be one that is looking like it is overvalued. But you can use this for all this new feature of kind of the fundamentals you can use across all of the strategies here, right? So let's say we look at let's look at all the technical strategies. We can also look at it looks like there are no stocks that are undervalued in any of our ideas here for today. So, that's okay. That's really kind of what this tool is designed to do, is to help you do that filtering, right? So for example, let's take a look at, overvalued stocks. There are 5 stocks in our overvalued stocks, and the only other one is Allstate. Allstate triggered a trend following, a bearish trend following scan, right? So the other ones are counter trend. Allstate triggered a trend following scan. What that means is that this trend has already been established, right? This is a stock that's already been on decline. And what it did is it recently rallied, and now is an opportunity to basically take a short position here. As you can see, the stock's already down 3% here today. It generated a sell signal here this morning. So if you had done your research here this morning, you could have found this particular stock and potentially taken a short position on a stock that's down 3% today. Basically looking at stocks that are following the trend on the bearish side that is also overvalued. And that's how you can use these new features that are available to you here at OptionsPlay. We're trying to focus a lot of our attention on these trade idea screening capabilities that make it so that you can find better trade ideas using the OptionsPlay platform. Different technical scans, and now overlaying the fundamental piece is really, from my perspective, a way to automate the weekly research that we send out on Mondays and Thursdays for yourself every single day on the platform, because that's the work that we have been manually doing for the last 9 months of looking at these technical scans, looking at our overvalued and undervalued list, finding stocks that match both, and highlighting those stocks in our Monday research report, the Thursday research report that you receive. We've been doing that work manually, but those trades have been quite successful, which is why we've been focusing on automating and building it into the platform so that you can basically replicate that every single day on your own using the OptionsPlay platform. But like I said, when you looking for stocks that align for technical and fundamentals, they don't happen that often. So there are days where you kind of look at it and you can quickly see there are no, fantastic trade ideas, and that's okay. Not every single day should you be forcing a trade. Not every day are there great opportunities. Only on some days are there great opportunities. I generally find that there are at least 2 or 3 good ideas a week, and for me, that's enough. And those are the ideas many times that we highlight during our Monday morning research reports or during our Monday morning trade idea session. So, more to come on this feature. Last time I showed you kind of when you're using a watch list. So for example, if you're looking at your undervalued stock list, you can easily see how many stocks have generated some kind of signal that are undervalued, or you can say, okay, let's look at the overvalued stocks. Which stocks, 11 of those stocks have generated some kind of signal here today. That's another way you can look at that as well. And you can click on it, and by clicking on it, you'll be able to see what type of idea it was generated, what type of idea is generated here, right? So this was a CCI trend that was generated here on GameStop. Twilio, this is a bullish, I'm sorry, this is a bullish trade idea. Yeah, this is a bullish trend following trade idea. on an overvalued stock here. So this is one that probably you might want to avoid. So this basically gives you the opportunity to take a look at it from two different ways, right? Which ideas from a technical perspective align with your fundamentals, or vice versa. If you're looking at fundamentals first, which ones have a technical signal on it. You kind of end up at the same result. It's just a matter of which way you prefer looking at it. We offer both. With that covers what I wanted to share with you here today. Hopefully this gives you a better understanding of counter trend strategies, why you should look at counter trend strategies in your portfolio, and more importantly, how you can actually screen for them automatically using the OptionsPlay platform. With that, let's turn this over to Q&A. But before I do, what I'll do is I'll leave this page here up on the screen here again, which is, if you want access to the OptionsPlay platform, the tools that can help you automate these types of screening capabilities, you can do so by going to optionsplay.com/signup or pointing your phone to the QR code on your screen. So I will leave this up on the screen while I open this up for Q&A. There is a Q&A window at the bottom of your screen. If you can bring that up and type your questions into the Q&A window, I'll answer your questions out of that. John is saying, how can I see the combination of the RSI indicator in OptionsPlay? At the moment, we don't have that yet. I'm looking to have that added as a custom indicator, but at the moment, that's not available just yet. Can you explain why there's a bear signal on Hood if it's not a reversal trend? Not sure I'm not sure I understand the question, but let me see. Let's go back to the Hood one, or Robin Hood. Let's go back to symbol. It'll make it easier to find. What was Robin Hood's symbol? Robin Hood generated a bearish counter trend signal. So the question is, can you explain why there was a bearish signal if it was not a reversal trend? I'm not sure I understand what you mean by that. What we're saying is that Robinhood has run so much, right? This was a $30 stock back in April. It is now a $100 stock. So this is the stock that's tripled, in 3 months. We're saying that there's a higher probability of a bit of a pullback here. Now, if you have followed kind of the news on Robinhood lately, right, with regards to what they're doing with tokenization of securities, I do think that that is interesting enough where I probably wouldn't short this particular stock, right? But I only would have known that if I had spent some time researching the stock itself and just understanding why has the stock tripled in the last 3 months. Especially for those of you that are interested in blockchain, especially, you think about kind of the actual, for years, we talk about kind of Bitcoin and the applications of Bitcoin. And it feels like Robinhood's kind of making like the first practical application of blockchain for financial services. And that's why the stock was up. I think it was 13% the other day, and paused yesterday and now up another 8% here today. So I think that there are some fundamental reasons and just enough hype where I probably wouldn't short it right now, but it has all the hallmarks of what you would typically look for in a trend reversal. So what we're doing is we're highlighting potential trend reversals. Ultimately, there are still a few factors that, as a human, you want to just do some common sense checks before you actually go long or short on a specific stock. Seems like you said that RSI 14, you are using 80/20 as overbought instead of standard 730. No, we're using a standard 730, not 80/20 for RSI. Stochastic is using 80/20, but RSI is a 70/30 as the overbought conditions. Michael saying WD Gann, Michael Jenkins, and DeMark have done extensive work on identifying trend reversals. You're absolutely right. Those are all trend reversal strategies. Each one is uniquely different. And I would say mine is, I wouldn't say mine is that different from the standard version of trend reversals. It's just my version of it that has been back tested and has performed well, and which is why I prefer using it. And I have found that I'm able to find fewer false signals. You know, I for many years I actually really tried using DeMark. You know, and DeMark has made some really fantastic calls in the market, right? But DeMark also has a lot of false signals. And for those reasons, which is why I tried to look for something that was better. And this is what I landed on. Allison's asking, if a company has strong fundamentals as per your evaluation method, what kind of confirmation do you need to enter the trade, i.e. one day opening higher after identifying the criteria? So if the company has the fundamentals, then the only a third criteria that I'm looking for outside of the extreme is the exhaustion, right? In the examples today, none of them satisfied them. There was just a couple of them that look pretty close, like Disney, I think was the closest one, right? Let's just bring up Disney here. But Disney didn't align with the fundamentals, right? So kind of Disney had two of the three, but not three of the three. It had the exhaustion. I'm sorry, yeah, it had the trend reversal signal. It had the exhaustion, but it didn't have the fundamentals. The ones that had the fundamentals didn't have the exhaustion signal. So all of them, the best out of the ones that were refined, only had 2 out of the 3 criteria. The ones that we highlight for you in our reports generally have all 3. What's your criteria for exiting? That's a really good question. So you know, if your question is there's 2 ways to answer that question, right? If your question is along kind of on the security side of things, right? Like if, for example, if we did decide to go short Disney today, let's say for argument's sake, Disney we deemed as overvalued and it had all the criteria, it had 3 out of 3 criteria to go short. The question maybe is, what's a target? You know, whenever we look at this, we always look at technicals to kind of determine a target price, right? So especially when you kind of have big runs like this, right? When a stock goes from 80 to 100 and call it 25 in a short period of time, you generally have some gaps in that run, right? So there's 2 big gaps here. You have that 10, call it 105 gap, and then you have a gap around 90, 92. So those would be kind of my targets here to the downside, right? So when it reaches those targets, those are opportunities to exit. Now, if you're trading options on this, you will also generally have stop loss and take profit levels on the options themselves. But in terms of the security itself, looking at prior support and resistance, looking at gaps are generally how I like to provide targets for these types of trades. So when we put our equity research on Mondays and Thursdays, we always give you a target price for the equity. So if it reaches that target price, that is one potential criteria for exiting kind of any of these particular trades. What does the light bulb image indicate? It means that there was a trade idea today, right? So if you hover your mouse over, it'll tell you the type of trade, and the color tells you whether it's a bullish or bearish. So as you can see, as I hover my mouse over, it tells me counter trend, and because it's a red light bulb, it's a bearish counter trend trade, right? So for example, if you look at something like what's one? Is it Morgan Stanley? No. Do we have any bullish counter trend trades today? I thought there was one. Maybe not. Are there any bullish counter trend trades today? No, there were no bullish counter trend trades today. So that's why I couldn't find one before. Do you believe RSI and CCI may work on macro ideas such as TLT, HYG, GLD, and SLV? So the question is, do these indicators work on ETFs? The short answer is yes. The long answer is that you obviously can't do fundamental research the same way you could on stocks for those ETFs. So, you know, bond ETFs, gold and silver, commodities, those types of things. So you lose that third component of it, but you do get the first and second one. Where can we get more discussion on exhaustion? Exhaustion is just it's really not that um uh, it's just when price and momentum diverge from each other, right? So as you can see here, let's just take a look at this kind of, if we zoom in, if we zoom in here, right? As price makes higher highs, you generally want to see your momentum indicator continue to make higher highs as well, right? And when that relationship stops, right, when you make higher highs in price and momentum no longer makes higher highs, those are some signs that that momentum is slowing down, that buyers are starting to get exhausted, that there's a higher probability of a pullback, or vice versa. If something is going down, right? So for example, if something's going down, you want to see that momentum continue to move lower here. But at some point, as we continue to move down, momentum no longer continues to move higher. It no longer moves lower. It actually starts to move higher. And that gives you that a higher confidence of that actual reversal, meaning now is the time that you're going to get that reversal. Will we be integrating more brokers? Yes, we are definitely looking to integrate more brokers. Schwab is definitely the next one that we are looking at integrating. Can you please show the screening for trend reversal step by step? Are you talking about like on the platform? So, there's three scans, right? There's trend following, CCI trend, and counter trend. Just select the counter trend one, and that's it. I would select both bullish and bearish just so you can see both. And that's how you can find. So as you can see, there are 18 counter trend ideas, and all of them are bearish, which is not surprising given where the market is, right? When the S&P is up 28% in 3 months, you don't have a lot of bearish counter trend. I'm sorry, you don't have a lot of bullish counter trend ideas, but you do end up having a lot more bearish counter trend ideas in this market. Do you find Heiken Ashi useful in identifying trend reversals? I've for many years tried to use Heiken Ashi. I don't love it because it it looks clean in hindsight, but you lose a lot of fidelity in the short run, meaning it's averaging things out and you don't really get a good sense for where it's actually trading right now. So from my perspective, I don't particularly love using Heiken Ashi. I do find Heiken Ashi smooths out the indicators. So depending on the indicator you use, Heiken Ashi sometimes is useful in helping you smooth out the indicator, which I think sometimes is helpful. But yeah, overall, I haven't found fantastic use, at least personally, for it. Will the chart show a sell indicator of some type when both criteria, overbought and exhaustion, are met? Do we need to infer it ourselves? So the exhaustion part is the part that you have to infer yourself, because that requires just a bit of a human touch to identify that exhaustion. I've tried to work on algorithms to kind of identify exhaustion. They're incredibly hard because there's no bound as far as how far of a look back period you want to find that divergence over. So it's something I've toyed with. It's something I'll continue to work with, but I haven't found a great algorithm that will reliably also tell you when something's exhausted as well. Please clarify the purpose of averaging the RSI and why divergence should be a check on RSI 14. That is normal RSI. Well, actually, the reason I say you can just use the 14 period RSI to find divergence is because when you do use the custom RSI to check for divergence, I don't think I've ever found any times where the custom indicator had divergence, but the standard RSI didn't have divergence. The two are very heavily correlated. But what you'll find is that the standard RSI gives a lot more false buy and sell signals that the custom indicator doesn't. And that's why we use the custom indicator for the actual buy and sell signal. Where do you click to find the overbought and oversold stock? So under technical ideas, there's a sort and filter, right? And what we're only looking for are the counter trend trades for this particular setup. The recording will be available on YouTube. Normally we post it on Sundays for the sessions that we have on Thursdays. I'll try to get this up and I'll try to get this up and live before Sunday this week, just because we have a shortened week with the holiday coming up. Julio's saying that if you use different indicators, that some of them did have exhaustion. If you're comfortable using other indicators and finding exhaustion on that, you certainly can. Like I said, there were a couple of stocks that were close. Like Disney, I thought was pretty close. That probably, if you looked at other indicators, you might see some divergence here. I was just using RSI because these are using RSI. OptionsPlay displays a 52-week IV rank. Is it always the best time frame compared to the 13 and 26-week IV rank? I don't find 13 weeks is enough, right? Because 13 weeks is only one quarter, and you're not really getting the full sense for the seasonality of it over an earnings cycle. So at the minimum, I would use 26, but the industry standard pretty much is 52 weeks, which is why we stick to 52 weeks. Do you think there's a counter trend reversal for BRKB, and do you see a bullish momentum divergence? I haven't looked at Berkshire B in a while, but let's take a look. First of all, it didn't generate a counter trend reversal, otherwise it would be in here, right? From my perspective, this hasn't been a big enough of a drop. Does it have momentum divergence? It looks like it does have a little bit of no momentum divergence, right? We're making a lower low in price. But if you look at RSI, it's actually trending a little bit higher here. So there is potential of some possibility of reversal here. But Berkshire, I don't have a view on the fundamentals of Berkshire. So I basically you have one out of the three criteria. So from my perspective, that's not enough. I see momentum going up. Isn't that a signal of continuation of the bullish trend in Robinhood? Yes, that is the case, which is why I don't believe that is the right. Do you have a cheat sheet that has the three criteria for the counter trend and other strategies? So when you go to the recording, you'll be able to download these slides. And slide number 8 has the 3 on here. If you want, you can print this out and use that as a cheat sheet. Barry's asking a great question about relative strength, and he's asking, should I focus on those trades with the strength of 7 to 10? Great question. I do tend to find that bullish counter trend trades work better with stocks with low relative strength, meaning some of the most beat up stocks in the market. So if you look at stocks like Lululemon or Target, some of these stocks that have really been beat up over the last year, those are the best buying opportunities, right? You want to buy stocks that everyone has sold over the last 6-12 months. Those are some of the best opportunities. Vice versa, if you're shorting a stock, stocks with the very high relative strength, those are the stocks that everyone is, those most crowded bullish stocks, those are the ones that have the highest probability of a quick turnaround. So for those reasons, if you're buying, I prefer buying stocks with low relative strength. If you're selling counter trend, I like to sell stocks with high relative strength. Do volume and exhaustion correlate somewhat? Yes, you generally do see some correlation between exhaustion and momentum and volume, but not always. Volume is not always as reliable. With that, that covers what I have time to answer questions for. I really hope that this is helpful for those of you that, maybe weary of looking at counter trend or concerned about kind of the risk of counter trend, to help you kind of lay out a strategy that makes sense, that has been proven to find counter trend ideas, and hopefully gives you kind of the confidence to scan for some of these opportunities using the OptionsPlay platform. And if you've never used these types of strategies, hopefully this enlightens you to look at a different strategy that helps you potentially outperform the markets versus kind of your standard following the trend, which feels very natural, but may not always produce, the highest performing results in the market. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here next week.